Hey, I mean, we talk to all of these guys. We already work quite closely with Google, quite closely with Facebook on certain bits of our stack. So yeah, of course, yeah, always happy to. I want to get more customers, and I want to offer them a great service. And those guys are very good at doing that in the consumer space.
At the same time, we're also seeing a lot of consolidation. Is that something that you're looking at actively in your role as a
Great question. So yeah, we get approached frequently. People looking to build out their capabilities, and then there are a lot of smaller companies that do what we do globally that might make an interesting way of augmenting our business. So yeah, I think you're going to see stuff get bought and sold a lot. Consolidation, particularly in payments, scale matters. Particularly at the top end of the market, you've seen all the merchant acquirers over the last 6 months get bought or buy people. And I think that will have a massive trickle-down effect across the whole payment sector. So yeah, watch this space. I'm not saying we're going to get bought or buy anything soon, but yeah, it's certainly something we look at all the time.
We've had a lot of big companies come to market lately and some pretty high-profile IPOs.
Yeah,
how has this not very successful so far? Has that changed your view on the IPO market, and what are your IPO plans?
So yeah, we recently hit a milestone of profitability, and once you've done that, you start focusing on raising more capital and start thinking about long-term sustainability of the business. Public markets matter generally in that conversation. So I think kind of some of the US IPOs are were pretty bullishly marketed in the first place. The pricing was kind of crazy. I think the IPO markets are still open in Europe. You're seeing more companies IPO this year than you have previous years, and yeah, I think it's something that we will do it when we're ready, and if the market happens to be good when we want to do it, then we'll think about that. If it doesn't happen to be good, the benefit of being a profitable business is you can stay private for longer. So,
any time frame you're looking at there?
Wow. Okay. Yeah. Asking all the incisive questions. I think we'll look to do something in the next 2 to 3 years.
Talk a little bit about that idea of profitability that I heard you mention, because that's actually something we haven't seen some of the
it makes us in a very small subset of all these other fintech businesses out there. Yeah.
Here. Is there a bigger focus on that now, maybe, than we've seen kind of an unsuccessful wave of unprofitable companies?
So, yeah, I mean, you look at something like Uber or Lyft, and it's unclear as yet as to whether they'll ever return cash to the business and actually become profitable. I think Europe has always been different. I think continental Europe, Germany, France, Spain, those markets where we're big, have always been much more sanguine about wanting to make money and actually being sustainable businesses. And then the venture capital market in Europe is slightly less developed than it is in the States. So it's very hard to find somebody who's going to fund you to the tune of billions and billions of dollars all the way through, so you can go to the public market still losing money. So yeah, I think there's always been this focus on profitability. And the other thing is payments tend to be profitable. If you get to scale, and that's the main thing, if you're doing scale in payments, you're going to be making money.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.